Hey, this is Rich with breathingwiththemarkets.com. How are you doing, traders? Today is December 1st, 2024. Can you believe it? We're almost done with this year. So the last few months of any year in trading, what I like to do is not really think back on what I could have done better. We as traders, we should continue to learn and not be too harsh on ourselves, not to criticize ourselves, and really think about what our goals are. We got to have short-term goals and long-term goals. As traders, we shouldn't set the bar too high for us. Okay. We shouldn't have this expectation that we're going to become profitable next week, next month. The goal, I want 2% a month, 3% a month. Allow the market to dictate what it's going to give you. I want to talk about risk management a little bit, and we'll see where this conversation goes. I have no plan. So, risk management. A lot of people talk about stop losses. Unfortunately, there are some fools out there that automatically assume that if you don't use a stop loss, that you have poor risk management. That's not the case. Okay. I can go around and say and flip that conversation on them and say, you have not leveled up. You don't allow the market to breathe. You continue to get your stop loss in. And if you didn't have that stop loss there, you wouldn't have taken a loss for the day. You would have allowed the trade to work and it would have went in your direction anyways. They don't talk about that. All they talk about is this risk management. That was great today. I only lost X amount of money. I was two trades. I only take two trades a day. I only take three trades a day. And when I lose two trades, I'm out. This is the mentality of some traders. That's okay. That's okay. But don't knock down those who don't use a stop loss. I allow the market to breathe. I'm not going to choke my trades out. If I'm wrong, I'm wrong, and it's going to hurt and it's going to sting. That's the way I trade. No pain, no gain. But there's been thousands and thousands of trades that I've taken that I have allowed the market to breathe and not get frantic on a pullback. And when it pulls back against you and you have the market direction right, I add in to that position. I have no problem with that. Have I lost adding into a position where the market just decided to just continue down against me? Absolutely. And that's the no pain, no gain. Okay. But that doesn't mean you quit. That doesn't mean you change a system. For what? The trader is scared to be in the market. If you have confidence in your trading and you have a skill level that has been confirmed only by you, then why are you using a stop loss? Because if you have a strategy that needs a stop loss, maybe that's not the best edge out there for you. Maybe you haven't reached another level. I would suggest continue to reach another level, okay? Work on trading without a stop loss. Maybe you're oversizing, okay? Try it. Don't oversize your positions. You don't have to be a big player. Oh my God, I take 50 lots on a trade, or I have 5 contracts on the NAS. And I'm on a 1-minute chart. If you haven't grown to that level, trading wise and skill wise, stay the fuck away, man. Stay away. You're going to be humbled. The best time to be humbled, in my opinion, is when you're trading at your level. If you're humbled and you're trading at your level and your skill level, that's okay. You're going to get snapped. You're going to get bit. That's going to be okay. But you're trading at your level, not outside your level. There's a big difference, okay? Psychology-wise. When you're doing the same thing over and over and over again, you're going to lose. That's a fact. Guaranteed. We all lose. But just because you blew an account, blew several accounts, blew all your accounts, as long as you're trading at your level, that's okay. When you're trading outside of your level and you're blowing and losing accounts, that's going to be a psychology problem. That's a lack of skill and you're going to drain your account. So as you come to a level, and only you know, as you come to a level, that's fine. Push the envelope. Continue to push the envelope little by little. Don't make big steps, little by little. Because you can take little money in the market and make bigger money. You can take just a little bit in the market, have a skill, and continue to grow that, and you will be happy. As soon as you size up 5, 10 times more, beast is going to come out and beat your ass. It's going to take everything you own. That's a fact. If it's not today, it's tomorrow, okay? I've pushed so many accounts. I'm not the all-time trader. I'm just giving you my experiences. I've been cocky as fucking hell on the market, right? Thinking you can't fucking lose, and you're just all in, and it just eats you up. Eats you alive. So let's see if we can break this down a little bit. We have traders that like to use stop losses. That's not a problem. That's not an issue. They're very successful at it. Most are not. It's a fact. So those traders that like to use a stop loss, have a system and they manage risk. That's how they manage risk. They have a hard stop. And when I say stop loss, that doesn't mean that you're not going to exit out of the market when it's going against you. At times, you may have a mental stop. I believe a mental stop is a lot more powerful than having a hard stop. Yes, we can allow that price to continue to go against us. That's just an excuse for other traders to use as a reason why they use a hard stop. The bottom line is risk starts before the execution of a trade. That's a fact. If you don't know where the hell you are on the chart and you don't know what the hell you're doing, of course you're going to use a stop loss. You have a gambling mentality. But if you are confident in your trading, you have a skill, you've worked on your skill, you understand that you have a skill, it shows. Why use a stop loss? Allow the market to breathe. Just because you execute a trade doesn't mean the market's not going to pull back from your execution, your entry point. Probably 9 times out of 10, it's going to do so. It has to flush out the retail traders. It has to flush out people in the market. Price goes up and down. How far up it's going to go and how far down it's going to go, who knows? But if you have the direction right and say you have a reversal that's right based on your experience, it's going to come back and test that area. It's going to knock people out of the market. Now, I don't, all this liquidity hunts and stop hunts and, sweeping the liquidity down below and up high. Okay. You can get into all these conspiracy theories, okay? The bottom line, the market breathes. The market has to breathe. The market has to fill the gaps. We would not have a moving average if every gap on the market, every gap in the market, people call them fair value gaps, but every gap in the market has to be filled. The market's just not going to take off forever. Typically, I would say 90% of the gaps are filled in the market. Yes, you can probably go back in history years after years and say, oh, there's a gap that's not filled. I get it. But when a market's designed to go up, it's not going to fill every gap. Okay. But if you take like currencies, for example, that's probably more than likely with a high probability it's going to fill more gaps than a market that's designed to go up because you have two currency pairs working against each other. Okay. So you'll see a lot of times if you go back in history where the history is up and then the history comes all the way down. Then it goes back up and then comes all the way down. It just depends. And it depends on the time frame that you're on. So nothing is 100% certain. So when I communicate to you, it's not 100% certain. Nothing in life is 100% certain. But I talk about probabilities. Okay. In my experience and tens of thousands of trades, currencies, futures, stocks, options, all this stuff. The chart is going to breathe. The market breathes in and out. Inhale and exhale. Exhale and inhale. It just breathes. That is the market going up and down. It is breathing. It is live. Okay. It is live. So if you picture the market being live and being able to breathe freely, why are you trying to choke out the market with a stop loss? Ask yourself that question. Is it working out for you? Are you paying the brokers? And when I say you're paying the brokers is you keep putting money into the bucket. You keep putting money in the bucket to keep trading. And then you keep using stop losses and it gets hit. How many times, which is probably hundreds and thousands, who knows? How many times did the market knock you out of the market, not from your stop loss, and then go in the direction it intended to in the first place? How often does that happen to you? There's reasons why that happens. Most traders choke their trade out. They don't allow it to breathe. They're in too heavy. They're too deep in their contracts. They don't understand the direction of the market. They got lucky on a trade that was in the wrong direction in the first place, and they continue to practice that same thing because they had a holy grail by accident, maybe news, maybe something else that happened. And they thought it was the best trade in the world. And now they're practicing that same setup, but it's in the wrong fucking direction. How is that going to work out for you over time? What is the probability? Look at it as a probability. The higher the probability of the trade, better off you're going to be over time. That's a fact. The lower probability trade is going to eat you up and eat you alive, and you'll get a windfall every once in a while, and you'll get that mindset saying, oh, geez, here, let me give you this example. How about the traders that might have, and I'm just throwing numbers out, might have a 15 pip stop, 45 pip gain, and they just keep hitting that 15 pips stop. They hit it 10 times, or maybe they have a 1 to 20, okay? So they do their math again. They're doing it on their little calculator, just like people, gamblers with the prop firms. They're calculating everything out. If I do this 20 times, what is my risk? Pass 50% of the time, and then I get to funded account and then I get a payout 20% of the time. They're doing all this math. Instead of reading the chart and understanding the way the market moves, they're doing calculations on the sideline. So when somebody keeps calculating on the sideline saying that they blow up accounts, well, yeah, you'll blow them up. But over a period of time, you're going to come out ahead. That's called gambling. There's professional gamblers. That's a gambling plan. That's gambling. So if I make it only two accounts, if I have 10 $1,000 accounts and I reach my target on one, it erases nine others. That's gambling. That's not great odds. Why wouldn't you want nine winning accounts and one failure? That's not gambling. That's trading with a high probability. So when you hear people talk about over a period of time, you're going to come out ahead and they do the calculations, gambler. Someone that doesn't know where the hell they're at in the market. But what they do know is the probabilities of, well, if I take 10 accounts and I pass and I'm successful on one account, it erases all my losses. Do you really want to trade that way? That's fucked up. Why don't you flip that around? You can. And it's called a skill. Learning how to trade with high probability. It's as simple as that. How often you want to trade? How often you want to find your setup? Depends on the time frame that you're on. There's a flavor for everyone. But for those traders that talk about their stop losses, and that people that don't know how to manage risk don't use stop losses, level up. That's my suggestion. Level up. Pretty simple. I allow the market to breathe. I'm not intimidated by the market without a stop loss. Yes, bad things can happen. Yes, things happen without notice. I'm willing to take that risk because I've learned to breathe with the market. And that's true freedom in the market. I have no problem jumping in the market without a stop loss. I have no problem holding a position overnight without a stop loss. I have no problem holding 28 different pairs without a stop loss. I've continued to work on my skill and continue to learn how the market breathes. If I can do it, so can you. But you have to put in the work. I've done the work day in and day out. I can teach people how to do that, but it's not for free. Nothing's for free in life. The time that we spend on the computer is money in your pocket down the road. I make these YouTube channels for free, but I'm trying to give back to the community. I'd appreciate it if you subscribed and shared, made some positive comments. But if you're a naysayer and a hater, this isn't a place for you. I understand your frustrations. I understand that sometimes you might have a bad day and say things you don't mean, and that doesn't make you a bad person, a bad trader. I get it. But if you're influenced by other negative people, just don't come around. Go to the negative area. I'm here to truly help traders based on my skill. I speak this way, and I'm a confident person. And the reason why is because I know the market. There's nothing to hide. I can have a legitimate conversation with anybody about the market. Anyone. I don't care how long you've been in the market. I can have a legitimate conversation about whatever topic you want in the market. Now, if you want to use all these big words and terms and all that stuff, I'm not interested in that. Let's just get down and grind in the market, talk about the market, not big words, not all of these, fundamentals and stuff like that. The market moves, okay? I don't care what news comes out. I don't care about who's the next president of the United States, depending on the market. I can see the market. The market is speaking to me. I am literally looking at that market. I don't care if thousands of traders are going long. I'm going short. But I'm not just going short because they're going long. I understand where the high probability is to be successful at what I do. That's what's most important, not the guess. Look at the market objective in a methodical way, like a robot. Can I teach you how to ride a bike? Well, that's stupid. Right. Stupid question, right? But if you can learn how to ride a bike, I can teach you how to trade. If you can learn how to drive a car, I can teach you how to trade. It's that simple. If you have a person that's trying to teach you how to drive a car that doesn't know how to drive a car themselves, very difficult for you. If we just use logic, just asking simple questions without opinions, just simple questions, and leave your opinions out of it. And when you can listen to other traders and listen to them communicate, you can take bits and pieces of what they say. You may not agree with everything that they say, but there's bits and pieces that you can take and put them in your toolbox. And if it works for you as a whole and the puzzle comes together, you know you're on the right track. And my job as a mentor is to make sure that the traders have a full toolbox and how to put all that together and how to look for the highest probability trades. Your eyes, not your opinion, not a hunch, not your intuition. Your eyes will not lie to you. The next time you go to a restaurant, think about what I said. When is the last time you went in a restaurant with a loved one, partner, wife, husband, girlfriend, boyfriend, whatever it may be, family members? You went outside because you forgot your wallet. went back inside and you asked the hostess, you know where my family's at? They're going to look at you like you're fucking weird. You should know what your family looks like. Same thing with trading. Your eyes do not lie. What you see is what you get. Unfortunately, no one has taught you, possibly, how to look at the market in a methodical way. That is what's key to trading. A lot of traders may not even be able to explain that. And they trade and never really thought about it that way. But I know the successful traders out there understand and maybe even not thought about putting that in, and they understand the market. What's important is to listen. Listen to as many people as you can. The most important thing is to listen. Take bits and pieces. You should understand by how somebody communicates what they show you. If someone's showing you their P&L every day, there is a result, right? If you trade, you're going to have a result that day. But I don't know anyone, and I know I don't have the time to post each and every day about a P&L, losses, wins, this and that, what you're doing. Everyone has a life. I don't get paid to do this. So I post what I want to post, when I want to post, and give back to the community as much as I can on my own free time. What's really important is that if you follow gamblers, you're going to have a very, very difficult time, and it's going to be challenging, and you're going to lose a lot of money. What is a lot of money? Anything that you cannot afford. That's a lot of money. It has nothing to do with volume. The bottom line is, if you can't afford it, that's a lot of money. On the flip side, you can make a lot of money. What's a lot of money? Something that enhances your quality of life. It has nothing to do with thousands and millions. If it pays an electric, if it pays your car payment, if it pays your tuition to school, if it pays off some loans that you have, it's a lot of money. Think about it this way, traders. If you're losing your paycheck that you worked for the last 2 weeks, no matter how much that paycheck is, and you lost it and you needed it, that's a lot of money. Don't be fooled by those who post hundreds of thousands, millions, whatever they're doing. All of those with the skill, and that talks about the skill, because that keep you in the game for life. No one can take that away from you. I can go on and lecture and lecture and lecture, and I don't sit here and lecture to my mentees like this because we're in the charts. And what I do in my mentorship is I speak 5 hours straight and go through the charts without stopping. There's a lot of information in there, but I break it down to like first grade, and then they practice and they practice and they practice. And I explain shit out of it and why the market moves, what to look for, when to look for it, why we look for it, and get the most out of the market that we can. Probabilities, number one in trading. The highest probability, the longer you're going to be in the market. Probabilities, I believe, is the most important thing in trading. The highest probabilities. Trade. I have nothing else, traders. I hope you have a great day, and I wish you well. Take care of yourself, keep reading the charts, and pay yourself. Remember, there are several people in this world who go out and get college degrees, and they spend 40, 50, 60, 70, $200,000 in their education, and they have zero skill. They have a piece of paper. Now they have to find a job. With what? No skill. You decide. Are you going to continue to have your stop loss hit over and over again and look in the mirror and say that you can do it on your own because other people say they did it on their own and you want to be just like them? Well, let me explain something to you. They're probably full of shit, okay? Because people that educate themselves have a better chance in life than those who choose not to. But you have to have the skill, and you have to have someone teach you how to be successful. And then you can work on that and fine tune that to your personality. Peace, traders.